Cool. Well, welcome, guys. It's been a while since we had class, but let's get back into the swing of things. So, um, I guess we can go over either taking profits and stop losses first, or we can just go over fib lines. So whatever order you guys want to do it in, just type it in the chat, and we'll go from there.
Patient, my shit's locking up over here.
What do you mean you can't type, or?
Yeah,
Oh,
I don't know what's going on here with my computer, but
all right.
taking profits is cool with me.
All right, we'll start with that then.
Which one?
Taking profits, stop losses, that kind of stuff.
Okay.
All right. We should have got some examples, but we'll find some as we go along. All right, so the first thing you guys want to do when you're trading, always have a plan going in. I mean, I know we talk about this all the time, but what ends up happening with a lot of traders, a lot of new traders, is that they'll get into a position and then they'll get stopped out of it only to watch it run like 30% later on. And then other times when they hold it longer, they lose all their money. And that's a pretty common issue among many traders. So what people don't realize is that most options are actually set to expire worthless. That's kind of the point. Every call and put writer wants them to expire worthless. That's why they write them, unless they're trying to hedge against a big position in shares. So, automatically your odds of being successful just off the bat are maybe 20 or 25%. And then, of course, you can increase these odds by, analyzing price action, getting out early enough, and not getting stopped out too early, and not, taking profits too late. So we're kind of going to go over some strategies to, maximize your gains and limit your losses, right? So I know a lot of traders have different styles, but for me personally, I don't like setting stop losses on my broker. A lot of you guys know this, but the market maker can see all those stop losses. They have access to level 3 data and some other weird stuff that only hedge funds can see. So they can actually see everyone's order. And if they see someone's order, that's pretty close where they can drop the price a little bit just to get them stopped out and get you to drop a contract, they will do it, right? They can see your orders and they can just stop you out. So it's not really a coincidence when you guys take a big position on something and then 10 seconds later it tanks, right? That's not a coincidence. Market makers are actively doing this to keep the liquidity in the market so that shares can move around and trading can continue as normal. So they're not necessarily against you, they just want more shares cheaper. That's the only goal of any fund, right? So to avoid this, what you guys want to do is you guys want to have your mental stop losses, right? And a lot of people, like I said, have different strategies of keeping or making these stop losses. But I do find that most traders don't actually have a plan, and they just say that, oh, I'm going to stop out of a trade if I lose $100, or if I lose like 10% or lose 25%, I'm going to get out of a trade, right? That's not really going to work all the time. I mean, there are going to be some trades where you might be down 30%, and then it actually is best to hold it and close it for double profits later. There'll be other trades where stopping at a 2% loss might be the best course of action, right? So we're going to go over some ways to identify when you should use these strategies, or if you should even use these strategies, and how to avoid losing money in the stock market, because a lot of easy money is lost just by stopping out too early. All right. Trailing stop losses. Yeah, I know a lot of brokers are it's kind of weird setting trailing stops with options contracts. I can touch on it briefly, but I have heard that as well, that if you set a trailing stop, they can't really see that. But yeah, that's a good point. All right, cool. So let's get into it. So I guess maybe you guys can start. Yeah, you guys probably start telling me what you guys do, because I think it'll move a bit faster and flow better if you guys can kind of give me an idea of how you get stopped out of a trade. What do you look for? And then I can kind of go over my strategies and see if we can agree on some things and why I might disagree on some things. So if you guys just want to type in the chat or just, speak on voice about how you set your stops, and then we'll just go over what we do.
So Knight, I'll jump out in front on this real quick. Farmer, I generally try to stick to a 10-15%, loss. And if it hits that mark, I'm jumping. And like you just said before, probably 7 or 8 times out of 10, that damn thing runs to the moon or whatever afterwards. And I'm sitting there looking at it going, shit.
Right.
So what are you doing in that situation? Is you getting out of support?
Well, I've been small account, so I've been trying to adhere to minimize the losses. And I said I just look at it. I put an alert up when it hits that alert, and it's roughly about anywhere from really 12 to 15%. I'm out. So I got to get the. This is coming to Casa, but I got to get the charting better and levels, I think.
Right. So that's a big part of it. That's a big part of what I was going to go over. A lot of people will sometimes just take alerts, right? And sometimes they don't actually look at the bigger picture, because if I give an alert, if it's a day trade in the morning, then more often than not, I am probably playing a breakout or I see a volume spike. But, in the middle of the day, some of these alerts aren't really meant to make money immediately. I might be playing a reversal or might be getting it a bit early, just because I might see potential to bounce earlier. And if it doesn't, then, we have a plan for that later on. But as far as stop losses go, your stop loss becomes easier and tighter if you get in closer to support, right? So obviously we've all been over support and resistance and how to chart these levels. So if you guys are getting in before you hit support, and then all of a sudden you tank towards support, then you actually might be down 12%. And then by the time it dips slightly below support before it reverses, just like it's shown on the screen right now, right? It is, right? See those wicks, how it dips below support, then it gets pulled back up, right? So that's basically what's happening, right? In the moment, you guys can't see that wick, right? Because you're getting caught in that trade. So in the moment when that wick is happening, you guys are like, oh shit, we broke support, and we're going down, right? And then only to see it rocket up right after. So how to avoid this is, first of all, you want to get in as close as you can to support. Or if you're playing a breakout, then you want to go as close as you can to the breakout level. If you're playing a reversal, sometimes it might even be in your best interest to wait for it to cross the level of support and then bounce, and then you can probably get in the trade. You might miss some money, but it's going to be a lot safer and a lot more guaranteed if you're playing reversal, especially at the bell. Like you see both these Apple opens, how we kind of dip below support in the morning, and then we just skyrocketed from there. So the one on Thursday was a bit less obvious, but Friday was pretty textbook, right? Pre-market high, pre-market low, and then, just dipped below, bounced, and broke pre-market high. Found resistance at Thursday's after hours, and then once it tested that 3 times, it broke out. And that's going to be a great, successful trade. So on the flip side, if you guys are playing a breakout to the upside, your stop loss should be maybe a bit tighter, right? If you're playing solely a breakout on a weekly contract, then you guys definitely want to be stopped out if the breakout fails. Like even if you are up and you don't see any more volume, just step out of a trade, right? I know it's harder with if you're under the pattern day trade rule, but sometimes it's so much better to step out of a trade if you're just not feeling it, right? But at the same time, you guys do want to be aware of pivot points in the market, right? So you don't want to be stepping out of a trade just because you don't break a level when you have so many different opportunities to bounce, right? And that's when you guys have to just refer to your charting skills and look at all these levels. So I know the 2 things I just said might sound like they're against each other, but you really need to pay attention to technicals first, right? So if you fail a breakout and you lose volume and you don't step out of a trade, um, if you turn negative, then you want to look for the next bounce point, right? If that bounce point is way too low, and this is a skill that you guys will get with practice, but if that bounce point is too low, then that either means that it's time to get out of a trade, and you might want to consider taking a longer dated contract, right? Um, Another good tip I have is that you guys should be looking at the time frame that corresponds with your goal, right? So what I mean by that is if you guys are looking at a 15-minute chart or like a 30-minute chart and you're not playing like a gap fill or you're playing a huge breakout level, then you probably don't want to be taking weekly contracts, right? Or looking at hourly charts. But if you guys are looking at much smaller time frames like 1 minute, 3 minute, or 5 minute, then you guys might want to be looking at weeklies and just scalp that stuff, right? So longer time frames means you should probably buy more time in your contracts, right? Buying more time in your contracts is also useful if you guys see a potential breakout, but it didn't quite work out, right? Because if you even buy 2 more weeks out, um, that contract can be down maybe 10% as opposed to being down like 35% if you just buy a weekly and you fail. And then at that point, you guys just get caught up in the whole trader emotional breakdown where you just see something going up, then it goes down, then it goes up a little bit, and then you're hoping for it to go back up. And then, by the time you finally break even or still lose 50%, you've missed 3 or 4 other great trades. So um, a lot of this is just trader psychology, but um, all of this is not going to work if you don't have a plan, right? One more tip that Casa and I use all the time that really makes a big difference in breakouts and stop losses is we always want to look for a couple cents below our level because especially if we have a mental stop loss, then if you have like even let's say 50 cents below or even $1 below, depending on the price of the stock, that can sometimes save you from getting shaken out of a trade. So again, looking at Apple, that 136.2 level, I might say, okay, I'm going to stop out at 135.7 instead of 136.2, right? And if I had stopped out at 135.7, I would have stayed in that trade. And if I even saw that, that bullish engulfing candle, I'm looking on the 5 minute on Friday at the bottom, 136, and then a breakout. Yeah, right there. That blue candle right there. If I'd seen that, I could have even averaged down. So at that point, I can just put that breakout, and then it's a nice cup and handle right there, and we're off to the moon. And they're at broke all-time highs. And if you guys had contract for next week, or I guess this week now for the 29th on that breakout, you guys would have been a lot less scared about getting in that trade and staying in that trade. If you had 0 date expiration, well, that's a different story. You probably don't want to be taking 0 date expiration unless you are surely running, like you're sure that you're actually going to run. So it really just comes down to risk management again, and that's kind of how you want to be, timing your entries and just not getting shaken out of a trade. There's a big difference between having like weak hands um, and just sticking to your plan. And if you don't have a plan, then all you're doing is really just taking alerts and not really focusing, right?
Just basically
So
gambling.
yeah, that's gambling. So just don't do it. Stick to your plan. I really don't like percent stop losses. If you are getting scared about percent stop losses or like a dollar amount, it probably means you put way too much in the trade or too much of your accounts in that trade. It's just not worth all that stress. So, you know, if you guys have smaller accounts and you guys do want to trade these breakouts, I would suggest looking at the next week's contracts, right? Time is always more valuable than pretty much anything else because time allows the price to dip and recover with you gaining your premium back. With weeklies, you maybe have 2 or 3 chances maximum if it's like not Friday or Thursday. So just be careful of that. These are some of my tips that I use. And of course, this works both ways for calls and puts, right? So
Another thing for a stop loss, you can also set it if you're in a call and you are up in profit, you can set it like up in profit instead of you leaving it the where you enter the trade, right? Like if you let's say your stop loss was over here, you enter the trade and it start going up, move it up. If you set it up on the app, just put it in the money. Like if anything it dips below this, you already taking profit. If trade doesn't go like against you and stuff.
Yeah, guys, I use that a lot also, and just want to throw a little input in there. Like, don't turn a winning trade into a losing trade.
Yeah.
You know, sometimes setting that stop loss, it gets you out, and then sometimes it does go down or it does bounce like it did in Apple, and you know you could have made more money. But listen, at the end of the day, you took profit and you made money.
Yep.
Well, I got a question on that. Now, when you set that stop loss, are the market makers looking at that too?
Yeah.
They look at everything. Yeah.
Okay, because I've been using the alerts, you know, like if it goes up and I'm in the money or I'm, you know, I got some cash coming in, I'll set my alert right close to that, you know, and if it goes below, it'll ping me if I'm doing something.
Yeah.
Yeah.
So the problem with that is like, you know, sometimes we're in these trades and the market, you know, just tanks, you know. So if it didn't catch your stop loss, and then you got an alert by the time you get on there and set the trade, you could actually be negative, you know. So you gotta like pick and choose your poison. Like, yeah, the market makers might see it, but you know, I use stop losses a lot, to be honest with you, and I'd probably say like 7 out of 10 it works in your favor, you know.
Okay.
But there's been times where I got stopped out, and then the same thing, the thing took off, and I was like, shit, man, if I would have stayed in. But you know, it's part of the game.
Yeah, it's absolutely that's true. Yeah, there's always going to be times where you get stopped out and you do follow your plan and that shit just runs. But I do think if you guys do follow those tips about, you know, giving it a couple cents above and below, and also you know, just sometimes, I don't know, it's just something you guys will get with experience. But I just want to give you my tips going into it, because I feel like a lot of you guys are just really trading blind sometimes and just getting in trades, and then you see you're down $50 and you're just like, oh shit, I'm gonna cut it. And then tomorrow you wake up and you're like, oh, this would have been up, you know, $600. So that's kind of what I was trying to avoid for you guys. What was next? And then that brings us to our next point of taking profits. Pretty similar to stop losses, but it's a lot easier because you're green, right? So naturally, just as humans, the more money we're making in a shorter span of time, the more greedy we're going to get, right? So there's a lot of ways to combat that. First thing is, once you guys are up, you know, if you guys trade multiple contracts, it's time to sell some contracts, right? It's very rarely do I go into a position and I start winning immediately and I'm keeping all those contracts, right? You know, whenever you guys, there's always going to be a point where you might double your investment, or like, let's say you buy 2 contracts for 50 cents each, so $50 a pop, right? And then you have, you make a $50 profit, you know, with those 2 contracts. At that point, your next contract is basically free, so you can let it ride. So when I say leave runners on your contracts, it means that you should your maximum loss should not make you go negative. You should be at least breaking even, right? So if you make 50% on your contracts, on multiple contracts or whatever it is, then you should be able to at least break even if those go worthless, which is pretty much impossible unless it tanks immediately. So, you know, start scaling out of contracts if you are buying multiple. Another good tip for big account players or medium account players is you can start setting your stop losses once, like physical stop losses, just because you don't necessarily want to be watching a winning trade already. Like if you guys are up 20% on a day trade, consider that a very successful trade. Not everything's going to go up 80% every play. So if you guys are in a good trade, just set a stop loss and look for other trades. Because like I said, you're going to be a lot less mad if you guys are, you know, getting stopped out in a winning trade than you are if you guys just hold it and just watch it tank later. So when you're actively watching a lot of tickers, you guys do want to be setting your stop losses. I don't always set them. I set my alerts personally, but like Sean just said, sometimes by the time you even get around to it, after you're looking at other charts and talking over chat, and random stuff's going on outside, then you might actually miss your exit, and that's going to be an even worse feeling. So just always secure your wins. Once you're in a winning position, no one can really touch you, right? So just take advantage of that. Don't be green and then end up red. Like that's just stupid. So especially when you're up like over 15-20%, like that is a successful trade. And this is more about day trading. As for swing trades, that's going to be more about your plan, right? So I mean, there are some swing trades where I was up 30% and I might have only cut one contract, just because my plan was, allowing for maybe a 300% gain. But again, that's all going to come down to your guys' ability to do good technical analysis, which is why we go over charting so much in these webinars, and on voice chat. We have a charting channel. You guys need to learn your charting. Like, you cannot trade without reading charts. If you guys want to do that, then you guys can become long-term investors and do fundamental analysis and plan to hold things for 40-50 years. But even those traders still learn basic support and resistance and basic candlestick patterns. So as for small account people, that is part of our community, I would say that you guys are probably not buying more than one contract on the the more regular day trades. So I would say just start taking profits when you're up a decent amount. The stop loss thing I talked about, don't get shaken out of a trade just because you're losing money. You want to get shaken out of a trade because you break a level with confidence and with volume, not because you're down a certain amount on your contract. I guarantee when you guys start respecting the charts and not thinking about the money you could have made or lost, you're going to be a lot more successful, because you guys are just letting your emotions take over. If you keep watching your account, like, you don't watch your account balance. Like, when I get into a trade, I'm not watching the contracts. I'm really watching the charts and seeing how the candles are reacting. Another small account tip is you guys should really be looking into tickers that have cheaper contracts. Especially if you guys are trading on Robinhood or Webull, the commission is pretty much minimal compared to TOS, so you guys can afford to buy these smaller contracts, right? And smaller contracts, I mean like under $1 for a contract, right? So 50-cent contracts. There's a lot of leaps out there, like even Ford, GM, GE, Zynga, many companies like that, BlackBerry. They have leaps you can get, and leaps as in longer dated contracts, things that are 3 months out, you can get for under $1, right? So you can even buy one of those, let it sit, it's going to keep on growing. And then, once you can take some profits off of that, you can start converting it back into shares, or you can start using it for some of the more expensive day trades. So, we do try to cater to everybody here. If you guys have questions about what tickers to watch for smaller accounts, just ask. We post them all the time. But if you guys want a refresher, I'm happy to go over that with you.
Yep.
But yeah, that's pretty much all I have for taking profits. It's really going to come down to your discipline. But I just wanted to share my strategies with it. If Costa has anything else he wants to add to that, then
I'll send in some of the tickers that I had. I think I sent them before in the chat, but I'll resend it later.
I got you.
For the account size, basically goes from 500 to 1K, like 2.5K, and then all the way up to 30Ks. Like what stocks to play, those type of things.
Got you. All right, sounds good. Well, if there's no more questions, or does anyone have any questions on that before we get to fib lines? All right, cool.
All right, for fibs, right? We're doing extensions and retracements, right?
Yeah, let's start with the retracement because that's easy.
Yeah, retracements are easier. Just pick a stock.
You guys just pick a ticker.
Yeah, I'll do Square. Square's easy. All right, first thing that you want to do, you want to establish the trend line, right? So you can clearly see squares on an uptrend right here, right? So we want to go over retracements and extensions. So retracement basically is it measures how deep of a pullback is after, like, for the initial move, right, of a stock, right? So if a stock is in an uptrend, it's obviously going to have a pullback at some point. So what a retracement is basically it's showing you where that pullback could be. It's showing you resistance lines and support lines. So to do that on a TOS, if you don't have this tool right here up top, so to add that, let me just show you a quick tip. So you go to chart settings, you go to my tools, you turn it on, put it on chart, and then to add that, you just click this sign, and then you do add. You add the button. You go through and you find Fibonacci's retracements, or you can middle click and then you go to percentage right here, retracement. So first thing that you have to do is find the initial move, right? The initial move is basically the upward momentum from low to high, right? Of the to find the retracement. So for this instance, so the initial move is obviously this one right here, the low of this to high to that, right? And then your retracements are going to be these points is basically the golden ratios from Fibonacci's levels. The golden ratio is the 618 level. These are basically points that where the stock is potentially about to bounce. So in this level right here, it bounced at a 78.6. So you can clearly see we are going to be on reversal soon. So if you can draw these on multiple time frames. So right now I'm on a daily, but you can go on lower time frames and redraw them as well. But you want to start from low to high, right? If you're doing a retracement, basically this your initial move is this move right here, and then your retracement is this move right here, right? And then for the extensions, your extension is basically initial move plus retracement, and then your extension is going to be something like that, right? So you want to do, I'll do that one after, but I can go to different tickets if you guys want, if you guys have any questions for now. I know the Zoom got 8 minutes for now.
Yeah, well, Casa, but what levels are you supposed to have here? Like, because I put mine on here and it says 023. There's like 50 levels here right now. Like, is there specific ones that you?
Yeah. So for retracements, so ignore everything I have after one, because right now I'm doing my retracements with extensions included. It gets confusing, but so you want to have 0, 0.236, 38 twos, 0.5, 618, 786, and 1. That's your normal retracements, right? Anything after that is basically extension. So after 1, you got 1.72, 1.618. You can color them as how you wanted them to be. So basically, I have the 618 as red. Basically, that's the golden ratios. The 0.5 is yellows, and the other ones is green, just to differentiate on the chart. Usually 0.618 is basically big resistance and critical supports that usually gets broken, and because everyone that's trading is going to look at these numbers, and you as a day trader, if you know it broke 0.618, so you know that stock is going to either flush hard or bounce pretty hard, right, on that level.
That's that 618 level, 1.618, especially on the extension that we'll show you later. It's a very important line. And on the retracement, that 0.618. All those levels in between, there's usually a lot of heavy resistance, right? And like you said, everyone's watching these levels, and all these algos are programmed to trade off these levels. So that's why you'll see stocks, react so strongly on these levels.
Yeah. So, Casa, could you put like maybe in the chat and like the priority membership, like just the colors that you should have and stuff like that.
I'll screenshot it. Yeah.
All right. And then how do you get like on mine, like what do? You have it set so that the right side of the screen is so far off of the so you can see all the levels, like, because right now like all my levels are just completely
right next to each other, right? So what do is you at the top right, so you double click it. So when you draw it on the chart, you just double click it. Then you want to do right extension on and show coefficients on the left. You can either show it on the right, price on the left, or price on the right. But I like it like this because I like looking at the levels on my right side. And so to do that, you show price on the right, and then show coefficients on the left, which is basically these. And then extensions basically extends this line over. So if your line is not going all the way down there, to the right, so it's basically you don't have it extended.
Yeah. How do you extend it?
You just right extension on right here.
Yeah, I have everything you have on right now. Mine looks like crazy different. On the right.
Did you do
Right.
save? So did you do show coefficient on the left?
Show price on the right, show coefficient on the left. Yeah.
Yeah. It should work, and then you do save as default. It should work when you draw it. Like it just appears.
You see how you have so much space on the right side? Is that?
Oh, I know what you mean. You don't have
Yeah.
enough gap, right? So to fix
Yeah.
that, you go to equities. Actually, hold on, I forgot. Actually, you go to time axis, right? To go to time axis, the expansion area. You want
Wait,
to add
hold on.
expansion area so it won't be like right on top of the tick, like the levels right here.
Fuck, hold on, my shit's like frozen. Fucking thing.
I usually add 50 just in case.
Let me see how you did it again. I can't do it. I don't know why my shit's frozen right now.
Time axis, and then you go to expansion area.
Okay. And then fit. I see. All right. Fuck.
All right, we're gonna have to restart Zoom, guys.
Yeah, we're gonna just restart it just so we can show the extension.
Yeah, if you guys have any questions about the retracement, I can redraw them with you and everything.
Yeah.
You can even do it here, like for instance, this one, right? This was your initial move. This is your retracement. So you would do it from here to here, and then your retracement is this. If you want to do extension from this one, I'll show you that one after it. It's pretty much similar. You do initial move to top of the move, and then your retracement, and then that's your basically extensions, right?
And also we can show you guys like some trades with this and how it kind of works.
Yeah, how to like you can
how to actually use it.
yeah,
Yeah.
you can do stop losses on those levels as well.
Yeah.
Yeah, let me end Zoom and we can restart.
Sounds good.